Welcome to the dark side.
All right, guys, next part, we're just going to talk about the simple understanding of understanding short-term trends when we know that it's in a bullish trend and when we know that it's in a bearish trend, and also when those potential reversals might be coming. You probably have a deep understanding of the 9, 13, and 20 EMA because I've talked about it vastly on all my YouTube channels and especially in the Krypton course. So essentially, in a bull trend, a dip to the 9, 13, and 20 is an area where you're going to want to buy the dip if you're long, or if you're short, you might want to be locking in profits because there are going to be a shitload of people buying the dip and things might just, see a massive fucking boost off that zone and you want to lock in some gains. But if things break down the 9, 13, and 20 EMA, this is definitely an area where things might just get absolutely crushed and you might want to stop out and sell. Not necessarily going short because you're already going to see a, potential big reversal. And then it's going to maybe go like here and then maybe see a big boom. But say if you got short up here, lock in some gains right here, and then maybe hold partial and then put your stop up here and then hold to see if it does see that next big move, because this is where you're going to see a massive dump. But a lot of us get greedy and only go for this and never lock any gains here. And then things fucking spike, just like we saw on the sand trade here. It's like, okay, short over under 50. Right into the 9, 13, 20. Okay, but what if this reverses and it just gets absolutely annihilated and goes back down to 20 cents? Wrong. Nope. Right off the 9, 13, and 20 zone and just absolutely crushed it up to 70 cents. You would have stopped out. You would have been on a massive loss before actually coming back down here. So that's kind of just the deep understanding of what that short-term trend looks like. And then a bear trend, if things rip to the 9, 13, and 20 EMA, this might be an area to potentially get short because it's in a bearish trend. But if it breaks out over the 9, 13, and 20 EMAs, that would be called a trend reversal, and you might want to stop out. So let's just take a look at Bitcoin here. And just for an example, coming in here, once this thing was below the 9, 13, and 20, also broke down the 50-day moving average, clearly a short-term bearish trend. Right here, this thing tried to break out over here, fake out, still under the 9, 13, and 20, a little bit over, and then finally had a confirmed decent closing price over it here, as well as over the 50-day moving average. And that was kind of the official reversal on Bitcoin. And now what happened, right? We can see spike up, come back down in the 9, 13, and 20. People might be thinking, oh, this is a reversal. It's going to just get annihilated and keep dropping. No, people bought the dip. What happened again here? People bought the dip, people bought the dip, people bought the dip, and then finally reversed right here. And on this side, now it's bearish, but it did spike slightly over, of which again, nothing is perfect. You're going to see a lot of different fake outs all the time. It's very difficult to look at these things and be like, this is a definitive trend indicator. Things are going to be all over the place, but it gives us at least a generalized idea of what the current trend is. So it did spike out over it, but then had an actual fake out and then get absolutely clobbered. And then finally a confirmed breakout above it. The trend reversed and now things are bullish. Now people are going to start buying the dip again on the 13, 9, and 20. Of this case, only to the 9, never even went back below it. And officially, once these things broke down, that was the breakdown. And now the trend is now bearish. And now things are spiking into the 9, 13, and 20. People could get short. People could get short. And then this thing just got absolutely annihilated here down into the next supply zone here. So that's just a simple understanding of the 9, 13, and 20 EMAs. When things are under it, people are going to be selling when it taps back into it. When price action is above it, people are going to be buying back into it. But once those things in the trend actually reverses, that's when it's like, okay, this isn't looking good. The short-term trend is now flipped over and things could start reversing. And also there's the combination of which we've talked about previously. The 50-day moving average is a very, very significant indicator of the short-term trends. Another thing, especially if you're short and also potentially to not go long anything, right? When we're in these bearish reversals, this is a very, very dangerous place to fuck around trying to trade the Krypton system, because if it's in a bearish trend, trying to trade breakouts, you're going to get your ass fucking kicked over and over again. I lost a shitload of money trying to buy the dip, trade fake outs throughout this entire period because I didn't have enough patience. And what I've started noticing going forward is that always wait until you see a wedge pattern breakout, because that's when you kind of get the confirmed reversal. That's when you're going to see a lot of patterns start breaking out and actually see confirmed follow-throughs, right? Because when we try to buy a breakout, we're not just looking for a quick little spike and we sell out. We want to see a confirmed follow-through and see multiple days of this thing just absolutely ripping and going fucking parabolic. And if Bitcoin is under the 15 or the 13, 9, and 20 EMAs, breakouts aren't going to see consistent sustained moves because Bitcoin is going to continually eat shit and nothing is going to work. And I said this in my Telegram group just the other day because Bitcoin was looking like shit. We're below the 9, 13, and 20 EMAs. And I said, Bitcoin's still in its descending wedge. As we have seen, when this happened every time so far, no pattern or long positions for the majority will do what you want until we break out above the wedge. Your long positions will continue to bleed until this happens and we could continue to go lower. And I said, lower we go indeed, because we saw a massive liquidation candle on Bitcoin right after that. But you can see me drawing my supply zones or actually demand zones here, which was at this candle here and also this cluster over here, which we can now translate that over to the chart. This cluster zone here, which is also just shy of 50K, and then also this cluster zone down here, which was where we saw the actual low of it going through. Okay, and so now we're in this descending wedge. And until this wedge breaks out to the upside, longs are going to get absolutely crushed. There's obviously going to be some dip buying opportunities at these supply zones for sure. But until we actually see a reverse in the trend, until we're above the 9, 13, 20, until we break out of this wedge pattern, ain't shit going to happen for the longs. Everyone's going to get crushed until that actually happens. If you are short, right? I don't get confident in my longs, or if you're wanting to get a short. And if you are short, if you see a wedge pattern breakout like this, you lock in your gains significantly because you could potentially see a massive squeeze to the upside, because when we do see these fucking things absolutely get ripped to the upside, I got my ass fucking kicked going short. If you haven't watched my YouTube video about me turning 20K into 1.7 million, I got overzealous going short and didn't have my stops in place. I'll link that video down below and you'll see me get absolutely crushed on this day because I didn't have a stop in place. Bitcoin pumped over 4,000 points in under 5 minutes and I instantly lost $50,000, and that just did not work out well for me. So if you see these patterns break out, now the problem is that I was first getting short because we saw this one pattern right here. I got short. And then now we're in this descending wedge, and I'm hoping to see another bounce off this level here and another push down to the next supply zone or demand zone, which was 30K. And we saw this same exact pattern form up here, break down the 50 moving average, come back up, retest the wedge pattern here, which is actually a little more right here. Once that wedge pattern failed again, we just saw an absolutely massive dump off that level. So this move that I saw right here on Bitcoin was the exact move I was looking for right here. But instead, that's why it's difficult to short, because the areas that are going to turn into a breakout and things might explode are also the areas where you want to get short, but you have to have stops in place. I didn't have a stop in place. I was literally checking my phone every 5 minutes while I was watching a movie with my girlfriend. I didn't check my phone for a span of 5 minutes. Bitcoin spiked 4,000 points in under 5 minutes, and I was instantly down $50,000. Always use stops, put them in place, or you need to be watching it every second, because even if I was watching it, I wouldn't have had time without having a stop in place to avoid that situation. But the exact move that I was hoping for right here didn't happen. I didn't have my stop in place, and I got absolutely fucking crushed. And then this time around, rather than getting short, my mindset was a little fucked from this whole situation right here. Like, I hadn't been shorting throughout this whole period because I got my ass kicked right here, but I just made, maybe 500 grand in the metaverse trading Krypton patterns. And then this time around, rather than getting short and making a bunch of money, I basically just locked in a bunch of profits because I identified the trend reversal. So I didn't get too aggressive here going short because I had a little mentally damaged from this run right here and this fluke of a trade where I didn't have a stop. 4,000 points in 5 minutes and lost 50 grand. And so this time around, my confidence was a little bit low to go short, right? Even though the pattern was here and I knew that this was definitely potential, I just didn't have the confidence. So rather than trying to make money short, I just locked in more profits and got rid of most of my longs in my day trading account. I'm still have my HODL account, but I identified this as a potential reversal. I didn't know this was going to happen, but that would be a significant move to watch. The same exact pattern I was going to look for here short. Again, sometimes when you go through these experiences, right, you might not be scared of dogs, but one day a dog fucking bites you, then the next dog comes around, you're going to be scared of that dog. Some of these times, this psychological aspect of getting damaged on some patterns that sometimes work, but sometimes they don't, and you don't manage the risk correctly, of which sometimes I don't as well. I make mistakes all the fucking time, or I get lazy. Like, I'm watching a movie and don't feel like setting the stop. It's going to take 20 more seconds to set a stop, but I'm lazy right now. It fucking sucks. And so me being mentally damaged, I didn't take advantage of this, even though I knew the pattern was there. And I said it in my group, like, listen, guys, if we roll off this bottom, it could go either way. It could either spike to the upside, retest, and we fucking rip. But if it doesn't and this fails, we're going to see a big slap. I wasn't expecting a huge liquidation candle like this, but we did see that. So I didn't take advantage of that short, took a bunch of profits on my longs because I knew that this potentially could be happening. I didn't want to succumb to that risk of that happening. So right now, as far as going long, buying the dip into these demand zones could be profitable, but there's not going to be any Krypton patterns until we break out above this wedge pattern and actually see something form up, of which the last time that we saw a big day like this from massive sell-off, right? I said from the last time I called the top, and this was just a disaster for people trying to trade any sort of breakout pattern. It took 98 days for things to recover and actually form up a wedge pattern and actually break out and actually see Krypton patterns form up again. It's hard to say what's going to happen now, but the bulk of the move has already happened. But we could definitely come back down and see this zone or even down to 30. We don't really know yet. All I know is that until a wedge pattern is breaked out to the upside, longs are fucked. Buying into extreme dips could be profitable, but big spikes into resistance zones could also be profitable going short. So that's what we'll be looking for.